Today, we're exploring how startups grow and evolve over time. Our specific topic is on focus versus diversification. And traditional startup wisdom, as you know, is focus, focus, focus. But is focus a luxury African startups can't afford? So we'll get various perspectives on that question. And our goal today is to offer a practical, honest, real world look at why, how, and when African startups expand beyond their initial focus. So we're here with three expert founders and CEOs that have all navigated the question of focus versus diversification in different ways. We have Olusola Amusan, the founder and CEO of Vesti. We have Fara Ashiru, founder and CEO of Okra. And we have Moulaye Taboure, founder and CEO of Anka. So we have real experts on this panel. They're building real businesses on the ground, and they're willing to share the good, the bad, and the ugly of what goes into that. And I think you all collectively have raised something like $40 million. So you're all very busy people. And I want to start by thanking you for taking the time to do this session for the benefit of builders across Africa. I want to get started with a foundational question for each panelist, right? So Moulaye, you started Afrikrea in 2015, 2016. So you're the senior person on this panel, right? So I'll come to you first, right? So the foundational question is effectively, what does Anka do? What was your core focus or core product when you first started, and what drove your decision to expand beyond that product?
Sure. So, hello everyone, and to answer your question, yes, when we started in 2016, we started with the same mission, but with a much narrower focus. So the mission was always to help export Africa and help African businesses sell outside their country, which is still the case. But we started with only a marketplace. If you think about it, in 2016, it was the years of Amazon, the years of Etsy, and we felt like African creative, especially, were getting a lot of interest, a lot of press, may it be on social media or elsewhere, but not a lot of revenue, not a lot of actual money hitting the ground in Africa. And our goal was to make sure that it was possible for people in Africa to sell directly to the people anywhere in the world that liked their craft, culture, etc. And what is interesting is that now this marketplace product that was called Afrikrea is only one of our three products, so it's still part of our business. It's still Anka Marketplace now, but we added to that Anka Shipping first, and then Anka Pay. So now we have a three-product suite of services that basically still serve the same customers, people that want to export outside their country, but that do it with products that is not only a front-facing marketplace that gets you customer. We still do that. We still have millions of followers globally, but in reality, we realized that we needed to do more for our customers for their business to grow, and that goes with managing better payment solution if they sell outside of our platform, and providing shipping solution that works for every need they have. So that's, in a nutshell, what we decided to do and where we stand today. So almost 10 years after.
Fantastic. And just a follow-up question before I move on to ask the others the same. So I kind of read your background and that blog post you wrote, I think in 2021, right? First, when you were first announcing that Anka product. And one thing you mentioned there is the idea that investors didn't invest in a plane, they invested in a rocket ship, right? So that's your words, right?
Exactly.
So the question I have is, to what degree how have investors impacted that decision, right? When you're starting with this marketplace, like what is really, to what degree did they impact that decision?
They impacted it pretty significantly, and I think it's interesting I think most of us founders, maybe us because we were not in the tech industry before, we were really, I was at PwC before, very simple guy, wanting to build a business that was profitable, efficient, etc. And quickly, I realized that in reality, it's not clear enough to most people creating startups how fast and how long you need to grow to be an actual financial product that makes sense for investors to invest in. Because most of us see it as a mission, so we tend to focus on sustainability because we want the mission to continue, rather than look at the reality that you are a shareholder just as much as you are a manager. And that becomes something very complicated when you realize that, yes, you can be sustainable. So we were profitable in 2019, but our investors make us realize that, okay, even if you're profitable, there is no way to make a return on the investment that was made to be this profitable if you don't continue to grow and if you don't grow much more significantly. So I feel like a lot of founders, now I like to remind people of the thing I wish I knew before, which is the famous single T2 D3, which is basically you're supposed to be able to, in your first 5 years, triple the first 2 years from $1 million to 3, then to 9, and then double every year after. So that gets you in a situation where you are close to $50 million of revenue, or at least any kind of significant metric, in 5 years. And that is something that we tend, I think, to not say enough in the ecosystem, because I think we all think all growth is good, and because we have been in such a complicated environment, we tend to favorize sustainable growth. But if you do that, especially when you have outside investors, they cannot make a return. And you also, as a founder, in reality, you hardly have a return. So that is, I think, my big lesson for anyone listening. And I think it's better that we tell straight up to anyone that is starting this race that the goalpost is going to be that far and that intensively and that quickly to be attained.
Fantastic. Thank you for that. Fara, I was going to come to you next anyway, but I see you nodding a lot while Moulaye was talking. So I just want to give you the opportunity if you wanted to respond to anything he said.
No, yeah, I just agreed completely with the final point around just building an investor backable business. I think we don't think about that a lot of times. And you have growth, you might see, growth, but we are, we are founders that have raised capital at valuations that we want to essentially be worth, and you want to be worth more than these valuations as well. And that's why, that's where you're going to have any M&O opportunity generally across the board. So whether that's raising additional capital, whether or not that is, super growth on your side, whether or not that is, acquisition or, going public, all of these things that we say, but we don't sometimes understand what that actually means and in everyday work and how long, that takes to get there. The average company, that does go public is usually in around 9 years. Maybe the fastest startup will do it in 7. And so, as you're building your company, you have to realize that, like, am I actually doing this in a, not just a sustainable way, like Moulaye was saying, but also in a way that can also get that ROI for investors. So I just really totally agreed with that point.
Fantastic. No, I think it's important. It's certainly a long journey with a lot of and I think you guys also were started I think before COVID, right? So
Yeah, just
even like
just like
structurally,
at the cusp. Yeah,
exactly. So we've
yeah.
seen different markets in many different ways. But I want to come to you. So the question is really the same, right? So just foundational level setting question. What does Okra do? What was your core
Sure.
focus or core product when you started? And what drove your decision to expand beyond that?
Sure. So we started Okra like you said at the cusp of COVID in 2020, and so essentially we built Africa's first open banking API. So the ability for consumers to connect their bank accounts directly to their favorite applications, and in turn, those applications can have access to their financial data as well as take payments as well. And as we built this business, we realized there was a large market for this. I think Africa generally has a really large market for infrastructural products, like products that are the core to building long-term solutions. But what we found is that as time went on, and we all saw this, FX devaluation, for instance, as one, just one economic point. The cost of doing our business was increasing, while intrinsically revenue was decreasing by no means other than just the economic climate, right? And then when you even go into building the product and building in such a fragmented market, you're working with institutions that are not your technology as well. There's a lot of things out of your control. And as we kind of looked at, what it's taking to build this, the question started being, how can we remain sustainable while we understand how to achieve growth? And one of the things that, we were spending a lot of capital on was our infrastructure, just even hosting our infrastructure. So, I posed a question to myself and to the team, like, if can we do this ourselves? Can we, go bare bones and actually host our own infrastructure? And if we can do this, can we then in turn do this for other businesses who will be looking at, sustainable growth as well as, high level growth. And if you can build that and you have a lot of like upside to, around latency, cost is lower, the latency is closer. Our customers are visiting us from within the continent. Let's be honest with ourselves. But, majority of us are hosting our infrastructure outside of the continent as well. And so our mission, like Moulaye was saying, just even with Anka, the mission remains the same. We still want to connect 1 billion Africans to the global economy. It's just how we're doing that, is through the product Nebula, which is our cloud infrastructure product that we're building as well. Because we realize, first you need to be able to build and host the product before you can go anywhere as well. And so we think that, infrastructurally speaking, we need more homegrown solutions. So it's, we're essentially trying to build that cloud for Africa.
Fantastic. And I think, just a follow-up question there, right? So you talked about, I guess, some shifts, some challenges in the economy that led you to think about hosting your own solution, right? And that created opportunities for others if you could do it for yourself. So I just want to, I guess, dive deep. And, if you had to classify this kind of diversification, right? Because I think, there's, broadly speaking, two types of diversification, right? Two categories. One is, I'm diversifying because I see an opportunity. The other is I'm just diversifying because, I need to, right? There's a necessity, and there's kind of more strategic or opportunistic. There's one that's a bit more, survival, defense, however you want to look at it. So I just want to get your perspective. It sounds like a mix of both, but if you had to lean on one versus the other, just how do you think about that?
I think it's definitely a mix of both. I think that, we found this opportunity because we needed to. So that's where you find, this mix of two. So from the necessity standpoint, it was becoming increasingly harder to run a business that's sustainable. You see your runway essentially decreasing month over month because it's simple math. You're spending more than you're bringing in, and at a certain point, that was happening regardless of what we were doing or how well we were selling. We were seeing, we were having the same amount of API calls, but essentially, your revenue is reduced. And then businesses in turn are having these same issues internally. Like, these things don't happen in isolation or in bubbles. And so they're thinking about how they're spending their money, where they want to spend it. What is a necessity? What's a nice to have versus what is a need to have? And in that sense, for us internally, our need to have was to be able to maintain our infrastructure in a way that was sustainable for ourselves. And then that's where, we realized that this need was beyond ourselves. This need was also extendable to a lot of people that even used our service, are using our open banking services as well. How are they hosting? Where are they hosting as well? And so, we found that there was a lot of crossover opportunity there, and a way to even, enable our customers to have that additional capital, not just to focus on their business and do marketing efforts, but even to also use our products, our additional products as well.
Fantastic. Thank you for that. Olusola, I want to come to you next. The same kind of foundational question. What does Vesti do? What was your core product or core focus when you first started? And what drove your decision to expand beyond that?
Absolutely. Great intro by Moulaye and Fara. My co-founder and I were new immigrants in the United States in 2021. We entered around 2018, 2019, decided to leave Nigeria, to live in America, to build a business. And he was going to law school, my brother. And we saw that immigrants were facing challenges. Top were financial services and legal services. We experienced these things firsthand. So it was difficult to finance a car, to rent a house, to do all of those things. So the data and AI company I had come to build in America was increasingly getting difficult to build. I had to depend on going back to Nigeria to get like my contracts and gigs, and I wasn't just integrating into the system. So my brother also was facing the same challenges. He had incredibly predatory credit cards. It was just hard for him to understand the financial system. So we decided to build Vesti to make that simple. Start first with financial services, then move to legal services as he finished law school and all those things. In starting, we basically picked the low-hanging fruits. We knew that we were out to solve for a problem that was way bigger, which is to simplify immigration and financial services for the next 1 billion immigrants. But we knew we were going to start with an essential suite of services. So it was first a wallet, just to do peer-to-peer payments, remittances to universities, lawyers, and things like that. And then gradually, as he finished law school, we started the full-on migration services, and every other thing after then has sort of become like a natural evolution. However, even though they seem like a natural evolution, some of them came earlier because we needed to survive. So the winter came for fundraising. We had gone through Techstars, and we thought everything was just going to be great. Raise money here. By the next cycle, just maybe 24 months later, raise some more money, and then just keep going. We knew we intentionally wanted to build a business that would, outlast both of us. Like we wanted to actually build a business that would return capital, because I'm a serial entrepreneur. So the previous one I did, Coven Works, I wanted to make sure my investors could reference that, and that investors would be able to reference Vesti in the future as well. But we had assumed it was going to be easier, but things went really crazy with the funding winter that happened. And so that funding winter forced us into like full-on revenue mode. So I usually tell people we raised about 7.5 million. We raised about 2.5 million equity, and then we raised some more money from revenue, which is essentially we reinvested nearly $5 million of our own money back into building what Vesti has become today. So recently, we started this motion to make sure that every country subsidiary is sustainable. We have 5 countries right now. We added a recent one last week, so I'm not quite used to it yet, Kenya. And so Nigeria decided that in order for them to be like a standalone subsidiary that would be successful, they would look at natural product evolutions that were in the direction of the work that we're doing. So we didn't just do wallet services anymore. We had started doing special talent visas, which were like one of my CFOs likes to say, the cash cow. And then we moved on to services. So investors have been asking us, like, what's going to be the recurring version of this? Like, how do you continue to make money? So we're looking at what product is going to catch better with subscription models. And that's how we got to begin to do airport concierge. Because folks who are moving through our platform anyways used to need to use the airport. When I moved to the US as a special talent visa holder, I came back to Nigeria 6 times that year to look at my business. In the same way, a founder who is getting like a visa to access funding in Silicon Valley may come back to Nigeria 6-7 times that year. So they would need a product that continues to assist them through that route. So the Elite Pass, which is essentially my experience of I couldn't resubscribe on Priority Pass because it was a benefit on Amex, and up till now I still can't figure out exactly how to do that. So we created a service to say, okay, since we've issued about 10,000 debit cards, we call them global gang cards as part of our fintech product, why don't we bundle on top of it a travel pass that allows them to access lounges and all of that, and also get picked up at the airport, skip the queues, and people got excited about it. $100 a year, it's nothing, but it could be something. If I scale that to 10,000 users, that's $1 million of revenue just like coming in through, just airport concierge services. And could we scale that to Kotoka Airport or Tambo and everywhere else on the continent, really? And then add that to welcome services for folks that are arriving in Canada and in the UK. That becomes a natural evolution. So on the outside, people may look at it and say, oh, where are you pivoting? But we're just adding and stacking up new layers of value for our customers so that we can be that one-stop shop for anyone that is going global, really.
No, that's fantastic. And I like the phrase you use there in terms of natural evolution, right? And I think that's something that is a theme, in different ways, right? So you talked about it from day one. Your brother was going to law school, so it was always in the mind to go from financial services, legal services, and then, this natural evolution around following the customer. I think Moulaye is kind of the same thing. Anka was the marketplace. Afrikrea was the main product, and then it became one of many products. And I think Fara, the same kind of thing. You're solving this problem that you have around infrastructure, and you say, if we solve it for ourselves, then doesn't it make sense to opening up to others? So it's a really interesting, theme that runs through there. And I think, Farah, I want to come to you next, right? So, now I just want to talk a bit, we've kind of set the level, the foundation. I want to talk about market realities for everyone, starting with market size, penetration, perception. And Farah, I want to come to you because I think there's at least a growing perception that the open banking market in Africa, or at least in Nigeria, is smaller today than what many people thought it might be, 5 years ago, right, in terms of that growth trajectory. So I'm curious about, I mean, you're in the market, this is your field. Just how did your market size assumptions when you were starting out collide with reality?
That's a good question because I'll probably take that twofold because there's the market reality of like your consumers, so what the consumer growth look like over the past 5 years, and then there's also the side of what did the infrastructural growth because we're still relying on financial institutions like the banks. So what do they and then the last time regulators would have there any been any policies that have advanced this and how that's happened as well. And so I'll start with on the regulatory side. When we launched Okra in 2020, there was no open banking policy. Open banking was a new concept. It was something that maybe just due to the the COVID catapulting the way that people were looking at technology and needed to it was the number one conversation in every boardroom is like, how do we serve our customers digitally, right? Then you started to see that the open banking framework was released. Okay, this is what we're thinking over time, but that is something that is subject to the banks actually actualizing. They actually have to go in and create APIs that are accessible for any third party to access. And then the second place is going to be, like I said, consumers. What did consumer growth said? You said, the market is smaller today. I think that you can see that the level of bank people have grown over the last 5 years. That's a fact. But how people are using their financial services, that's what I think that's where the anticipation of growth and shift look like for the 5 years. You want more people to use their bank online to connect their bank accounts to your application. We saw that with cards over time. You saw Paystack come in and really revolutionize almost how people are using cards online and so on. But that's the same thing we wanted to do with people connecting their bank accounts directly to applications. We definitely saw that growth. Was the growth in the trajectory that we thought? Probably, no, definitely not. I mean, if we, we wouldn't be diversified today if it was. Like, you have to be completely honest with yourself. But what we did see is that there is still. I mean, I still 100% think that open banking has to thrive for us to really see the next 20 years of growth on the continent, because for us to essentially open ourselves to the global economy, this has to exist. We see the evolution of the products that we've seen in the frontier markets, as we've seen on the continent as well. And so but you are still, like Moulaye said earlier, wisely, still trying to build a investor backable business along the way. You don't have the luxury of time as a startup funder. A lot of times what you have is the luxury of there is the terrain and there's the map. And why I say that is that the map is what you think is going to happen, what is like going to business school and you say, hey, if I do this, this, and this, this will happen. But then you actually get in the terrain, you're actually working, and you say, oh wow, there's actually a snake on this road path, let me turn right instead of left. Like, you're actually in it, and when you're in it, it's completely different than when you're thinking about building it. And so I think that from consumer growth, we didn't see that happen as fast as we wanted to. From infrastructural growth, we didn't see the banks like commit as fast. I mean, that's still something that's ongoing till today. It's not, the open banking framework has not been widely implemented at all. And so what we saw there is that this time there still needs time to be growth, but there's still time to have this growth. But what people are struggling with now is not that. It's now is infrastructural, is survivable, and so on. And how are you able to, for yourself, survive during this time, and then offer that solution to other people as well. And so, what we realized that over the last 5 years, what has really grown tremendously on the continent is the advent of data centers, tier 3, tier 4 data centers. We now have tier 4 data centers across the globe, and a lot of these are not being utilized outside of large, very, very large, like maybe banks or so on, or telcos that are doing they're co-locating, but they're not being utilized from the cloud. The cloud perspective. And so we've partnered with a lot of these data centers across the continent to provide that same level of uptime and features to customers as well, because you have to look at the market, and that's why I'm talking about the map and terrain. And when we saw in the terrain, what we saw is that although we didn't see this consumer growth in the level we thought, what we have seen is the growth in all these other sectors that are still helping us achieve what we're trying to achieve. But something really interesting was happening there as well.
No, that's fantastic, and I like what you said. about the luxury. So we talked about the luxury of focus, and you talked about the luxury of time, or specifically founders not having the luxury of time necessarily. And I want to come and make that connection to a question for you, Moulaye, right? Speaking about the luxury of time, there's a question about timing relative to e-commerce as a whole, right? Again, these questions are all around market, right? So Jumia, as you might know, just reported its Q4 results, its 2024 results, right? And one thing it showed there was that for all of last year, all of 2024, Jumia had 5.4 million active customers on a continent of 1 billion people. So this is less than 0.5%, right, in terms of penetration. So when you think about e-commerce in Africa, how do you think about it? Is it that the timing, to Farah's point, it's kind of in the future? We all know it's going to rise, but it's not within a venture time frame for you, who's already raised money. Is it that you have to aggregate different revenue lines in order to actually create a venture backable business in the sector? Just how do you think about that?
I think you basically said it. We all we all acquired because that I think is a proof that you've been hanging around enough founders to think like us. It's straightforward. It's a matter of timing. People think about, like you said, it's maybe less than 0.5% in Africa, the number of people are bought on Jumia, but I'm pretty sure people tend to forget that even in the US now, I think we are only at 30%. I think COVID was the hit, but then it went down. It's not the majority of people do not buy online even today, even in the West. Like, we need to accept that. I know technologists tend to live in a world where everybody is like us on 5 social medias, 10 different financial apps. That's not the reality of anywhere in the world. So then when you think about that, the question is more about what do you think you can build that is valuable? And that's the thing. So valuable is, contrary to what people believe, I think one thing I learned in this entrepreneurial journey is that value is in the eye of a beholder, not in yours. It's not because you think something is meaningful that it's valuable for people that will put their money there. And so basically you have to put their time frame into your assessment of your impact. I think that's the key thing. If we had enough passion capital that was looking at 20, 30 years, let's say, for example, I have the chance of having a company that is actually in Europe. So in France, we were helped a lot by the public funding. Their horizon is much larger than any VC. And unfortunately, in Africa, we do not yet have this type of public funding that have a much longer horizon because it focuses on impact. So I think it's a matter of if you want to do something, you must adjust your timeline to the timeline of people that are funding you. Or even better, like Olusola said, you manage to yourself fund yourself. Ultimately, the number one funder is your client. So if you're asking me if there is enough money in clients' pocket to do e-commerce in Africa, I believe there is. But I believe we still have to work on optimizing how we do it. Unfortunately, Jumia is still ultimately importing a lot. And it's pretty often, I don't think it's as big as a revolution as it could be. I'm confident. If someone comes to me and says tomorrow, I want to compete with Jumia, I'm not going to tell them you're stupid. If that is the question. My goal is not to say e-commerce is so small, you should not do that. No, you just need to build something that is valuable, and that means maybe going in different channels, maybe using different resources. Maybe AI is something that will help you one day do much more with much less. All of that is open. The good thing is, for now, at least the playing field is much more even for us in Africa compared to the West. We have discussion like this. There is much more founders that have, I might say, scraped the surface for the next generation to come. So if people are smart enough to rely on the experience of existing people, I believe there is still a lot of value to be made and a lot of great things to be done in e-commerce or any other business. It's just a matter of learning from what has been done and not repeating the same mistakes. That, I think, is the number one thing we should hammer our head. And I think that's why all of us that are pretty busy take our time for this type of thing, because we can tell that if we knew a lot of the things we know today, we would probably have been much faster and much better, and we hope that the next generation will do the same. We do that.
Fantastic. I want to come back to some of what you just ended on is one of the questions I have in terms of if you could start over, what would you do differently? But I want to respond to what you initially said. I'm starting to think like founders because I'm hanging out with a lot of them. So I have I co-founded a company in Francophone Africa, as you know. So you just forgot for a while. But the reason I say that is that company was, a super app company. So working in multiple verticals. And the question is coming to you, Shola, right? So as you think about, one way to think about Vesti is as building a super app really focused on, multiple verticals for people immigrating out of Africa, right? So I'm curious as to, you mentioned from day one that was a strategy, right? Financial services, legal, you mentioned, and I'm sure there was in your mind other possibilities as you serve that customer. So the question is just about markets, again, in Africa. Why does serving, that target market of immigrants have to involve multiple services from day one, or rather than saying, okay, I'm going all in on this one opportunity?
First, it's important to realize that there is no one service that an immigrant needs. And that's what we found out quite early. We asked ourselves, like, if you were moving to the US today from Nigeria as a student, like, what does the journey look like? And how many revenue opportunities are on that value chain before you get to America, when you get to America, and like my team likes to say, every minute after. So we knew that we were never going to be able to follow a one size fits all approach. We were ready for it. So from day one, we already started talking about insurtech, talking about revolving credit cards. We started talking about auto insurance. And for some of these things, or auto finances, some of these things, we wouldn't start them until like a certain part on our roadmap. For example, some of them required licensing that we thought, from the word go, we're not just going to get started. So if you hear that Vesti does remittances tomorrow, it's because to close the full loop of the immigrant who has moved out of their country, they need to be able to send money back. And while there are companies building exclusively for that, we have found out that discovering the customer much, much earlier, when they were still thinking about moving, is like the best moat for us. First, our customer acquisition is very, very low. Secondly, we're working with motivation and passion of the customer versus the intention of our team to sell it nice to have. It's a painkiller. People are confused. They don't know what to do. So we started out with that, and we knew right from the word go that the same way it's hard right now for me to finance a Tesla, it's going to be the same 2 years down the line when this guy has finally gotten a second job and he needs to buy a Tesla. It's going to be the same thing. So about 2 quarters ago, we announced that we're financing 100 Teslas as pilot, and I got lots of comments on Instagram saying, "You guys are confused. This is what kills Nigerian companies." And I'm like, you don't even know what the plan is like from the word go. Like, we're now considering development from a mortgage standpoint because we're losing a lot of money just making references and referring people, and we know we can do it. So now we're adding all of those things. So we also had an identity crisis where people would ask us things like, are you a financial service platform or are you a legal service platform? But I just asked them to be patient. Patient because once we had insurance, and once we had mortgage, you would have a mouthful to ask whether we're a mortgage company, insurance company, legal company, financial, and the list goes on. So today we're branding ourselves as a global immigrants platform. Like you said, a super app where you can find a one-stop shop to be able to find the things that you're looking for, and we're executing it phenomenally well. Like, we know there are a lot of rooms for improvement, but with 1 million downloads in the App Store, hundreds of thousands of customers, testimonials every day, very good margins, and just the fact that people pay us and still feel like we're doing a great favor because it's such a sentimental thing when you think about like moving to a new territory and not getting the support that's necessary. And there's so many predatory companies, so many predatory incumbents who, for want of a better word, they have like had a field day for years. And so with us coming on the scene, people seeing that they can do these things by themselves with technology, on their apps, and just be able to coordinate their entire journey in one place, like, it's just like somebody came out of the blues. And the validation comes from the fact that there's a dozen other companies who are beginning to go in this direction just because we did. And now a new category called migration fintechs, or what you will call immigration technology, is emerging. And people are betting on this because it's $500 billion spent a year on people trying to move from one country to another. Data which wasn't readily available because it's hard to find someone who has done civil society, who has done, United Nations, I used to consult for the German government on making sure that immigrants that move to Germany are skilled enough before they even think about moving. And most people don't even know that exists. Like the German government would literally pay to get people to acquire skills in Lagos in case they decided to move to Germany, so that it can be useful for the German economy. So it's a big ecosystem. Flywire does $200 million in tuition payments every school cycle or every month because of that. And there's the U.S. government making a killing, collecting money for service, student exchange visas. There's a massive economy for universities, especially in the U.K., who basically use this as their only livelihood and support their governments because of that. And now the story we're telling is we're not just a company helping immigrants from Africa to move to the West. We're helping people even from the West to move everywhere around the world. And it's the truth. Like Americans are looking for visas in Portugal. African Americans are trying to move back to Ghana. They need work permits to be able to get started there. What about intra-Africa opportunity, which is something we're piloting right now? There are folks who want to get Kenyan work permit and they're Nigerians. And it is as complex as you can imagine. Nobody even knows what to do first, where to go to, who to pay. Such an informal economy that you can really do a lot of work to make better. So as we think about what the future holds, we see ourselves as at the nexus of simplifying immigration, financial services, and every other service that may appear essential to immigrants, because that's really just what we want. Prosperity, opening the doors of prosperity, is what makes someone leave their home country in the middle of what has been termed, one of the greatest decisions to ever make. You have to be resilient, you have to be adaptable, and you're leaving your home country to go to the unknown, only to return to your home country to demonstrate whether you've made such a successful exit or not. So we're in that entire full circle, and we want to make sure that is something that technology can solve for, that AI can solve for, and we're not just pushing AI around like we're.
No, so it's fantastic, right? And I think you said something very interesting, which is how we thought about it as well, relative to the super app concept. You do something well, you gain the trust of your users, and then you're able to sell them additional services, right? Because you have that trust, so CAC is lower. And then I think what makes sense for super apps globally is that there are not a lot of competition, right? Kind of doing this. So, one thing you said there is also relatively pioneering this idea of migration fintech, right? You've kind of helped birth that category. So it's going to be interesting to see how that space develops over time. But now I actually want to go to, some of what you mentioned. And the next question is actually for you. So I want to go into just how these decisions are made, right? So I'm expecting, first of all, you to finance a Tesla for me. So I'll fill out the form for that as well. Just let me know where to go. But it's kind of to that point. So you're financing Teslas. I saw in the past you had a partnership to do loans, right? International student loans. You had a partnership so you could go on your website today and book a flight, for example. So the question for you is, obviously I think these things all make sense. I'll agree with you there. They're all around kind of that migration and that journey. But, as you have these different ideas that pop up, how do you think about what makes sense and what doesn't, or what, and the sequencing of it, right? Why is now the right time to pilot, Tesla loans financing versus, after we, do this pilot with the airport concierge?
Absolutely, that makes a lot of sense. So I think some of that comes from I used to sell Azure at Microsoft, and I've suddenly found out this 40-something-year-old company was just trying to be at every, sort of junction of their software journey. They have a consumer product, they have a B2B product, they have a CRM, they have cloud services, and all of that. And that sort of broke down the mental barrier for me that you can actually build, multiple units of, solutions, especially if they were speaking to the same target audience. The only thing that determines what we flip open next is actually so much about the barrier to entry. So I learned this early from some of the folks who successfully built 2 unicorns or 1, or exited a company. I would sit early with Okra of Jobberman and Inyi of Flutterwave, just asking what they thought should be built first. Right now, we have a registered investor advisor license that could make us like a Bamboo or Chaka, and because I live here in the US, like integrating with like a wealth management firm is super easy. But why haven't we started it? We saw that the barriers were there. Chaka and Bamboo were going to be clamped down in what we had found out as insider knowledge that there's about to be like something coming from the CBN, to affect them. And we totally held on with that product. In the other sense, to start an airport concierge service, we could determine that because I use this airport really frequently and I made a lot of friends, I can ask questions and say, hey, what do I need to do to actually get a license with the Federal Airport Authority of Nigeria? And then we can decide that. So I began championing like the ownership of some Teslas amongst immigrants. A mentor had bought one, then I bought mine, and then one of my investors bought theirs, and then my brother bought his, and another founder friend bought theirs. So we decided we're going to take our 5 Teslas, get a warehouse or shop, and then put them on display and tell people we're going to sell it. Until Elon began taking pre-orders for the new set of robotaxis that they were building. And that then became an opportunity to say, okay, maybe this could be faster, and we didn't have to put our own Teslas on sale. And then we got a license in the state of Texas for a dealership. And then we just keep going like that. However, when you think about things like remittances back home as something that we consider on our roadmap, but requires you to get 50 different MTL licenses across the US, and you haven't raised money like Flutterwave, or you're not like, it's not your primary business like Lemfi, you want to just hold on and say, you know what, it's not yet time for this. Well, if it was very important and the margin was great, like migration services, I would consider layering on someone else. But if I layered on someone else right now, the margins are so small, the risks are so big, so what's the point? But are we going to do that when maybe we eat $100 million ARR in like 2 years, according to like T2, D3, which, is phenomenal, by the way, and I just realized that's the script we've been trying to play because we're just very ambitious. Yes, we would at that point, but then the barriers will be a lot lower, a compliance team will be bigger, AML concerns will be a lot better, and we won't get shut down just because we're experimenting on something. Well, are there areas we can experiment on today? Memberships, communities, financial services, layer on mortgage. Mortgages are like, I got a mortgage, my brother got a mortgage, another founder friend got a mortgage. We saw the guidance that is possible. We saw how it could have taken us 10 years if we didn't get that guidance. So it's easy to like flip that switch open. So we look at the areas of least resistance that also make sense from a margin or revenue standpoint to our business, and ask the highest amount of impact to our customers in terms of that aha moment where they can say, oh, wow, these guys are really, really thinking about us. So the student loans, for example, total game changer. We don't underwrite loans by ourselves, but we found out that the gap there is that people can apply 4 times from Nigeria, not understanding what a credit profile is, not understanding how important addresses are in credit decisioning and things like that. So what we did is we layered on like a series of like funders who already have a commitment to fund between 10K and 100K for students moving abroad. And we decided that we're going to simplify that on our own platform, and then help these guys get access to these loans. And it became very game-changing. The revenues are great, but more importantly, students would continue to talk about how they never knew they could get $100,000 to go to Colombia, and now you're changing their lives forever. Now, they still continue to become a special talent customer. Then they bring their family, then they bring their friends, and it just keeps going like that. Like, what a phenomenal time to be alive.
So it's fantastic. If I distill down kind of what you're saying, there's ultimately a bit of calculus you're making in terms of business impact versus, how, I think you called it barriers to entry, right? How hard or easy is it to get in this specific segment? And Fara, I think I have a very similar question for you, right? So Nebula is obviously, we discussed, the background of this project, but what's that calculus for you, in terms of a real world example around Nebula, right? So how do you weigh the cost? There's this operational complexity of doing that. There's now a new brand, right? It's not Okra Cloud, it's Nebula, right? How do you weigh the cost of that versus, the benefit of obviously more revenue, potentially, in a different size market, et cetera?
Sure. So, with Nebula, first we just thought about it from the standpoint of internally, can we host our own infrastructure? So that roadmap was a bit smaller, it was a bit easier to understand. We wanted compute power, we need storage, we need our database. And then we just started kind of thinking more deeply and more broadly around like, what are actual people that are using and hosting their infrastructure? What are they using? Like AWS today has, 400 plus services, but most people are using probably 1% of those today. They're usually using the EC2, they're using S3, they're using, the things that keep their infrastructure going on a day-to-day basis. And we realize that, we're not trying to compete one to one to create 400 services for business. And I like what Olusola said earlier. He said that they thought about doing mortgages because they were referring so many people out, and so essentially what that means is that he saw the market, like the actual opportunity for people to use it and move forward. And so that's essentially what we did. We spoke to a lot of our customers that were that using our open banking services and said, what are your biggest pain points outside of this? And it was really like, my hosting costs are skyrocketing every month over month. They're becoming increasingly higher because just from the FX devaluation, and then I don't have the ability to even experiment. Like one founder told me that they want to experiment with AI products, but the cost to do that would be like $20,000 a month. And why would they spend $20,000 to test out an idea when they could? And they're doing this because they're hosting this outside of where their region is. As we are seeing growth in the another thing that forms decisions is we're seeing regulatory growth around the continent. One thing that's happening is that local data sovereignty is becoming a thing. More and more governments want you to host your files and your personal identifying information about your customers, etc., locally to your region and not outside of your of the continent, for instance. And so these are kind of things that these are questions you have to ask yourself in order to do this. So for us, it was really what is the the foundation, what are the foundational products that we can build, what are like the pillars that we can build, and then like Olusola was saying, staying very close to your customers to understand what they need as you grow as well. And so our roadmap is very closely related to our customers and helping them be able to scale. And what's really important for them is like affordability, local regions, latency, customer support, and help that that is not extra $100 a month to do. And it's also ease of use. Like there's still we realize there's still a big product market around cloud and just how easy it is to use it from because the person using a cloud environment starts all the way from an enthusiast that's just trying to start a problem to solve their own problem and just host a simple website, all the way to people that are trying to host multiple workloads across different infrastructures. So we just made sure what are those foundational products we need to build around, like load balancing, auto scaling, security, storage, object and block, as well as database services. And then where do we go from there? Where how can we scale this from there? And for us, it's more about just making sure that people can do this, and they can do this locally. They can do this across the region, and then we can also then start to look at what that looks like in terms of even opening up bigger opportunities down the line. Like can we as Africa compete globally in the gaming industry, for instance, and actually have low enough latencies not to die instantly that we get into the game. So just kind of things as well.
That is the goal. It's a big metaphor for startups as well. The goal is not to die instantly, I would say. But I just want to move. I'm reading the questions in the comments as well, and trying to be sensitive. And there's an interesting question there that kind of dovetails with the next section, right? So it's around how do you actually implement. And Moulaye, I want to come to you. I know Olusola said something interesting that, if I understand correctly, Vesti is structured at the country level, right? So you have basically, it's a country kind of structure. For you, obviously, as you mentioned, you have Anka Pay, Anka Shipping, there's Anka Marketplace. So how do you organize the structure? And then, which is a simple question. So I guess the more meaty question is, what are some of the challenges of managing diversified teams? And then the question that came from the audience is, how do you think about talent when you were just Afrikrea, right? Versus now that you have these three different, verticals. Do you handle, are you less involved? Do you have, someone who's head of shipping that you just trust running? So, voila.
Yeah, Very good question. So for the structure one, like you said, it's going to be easy. We have one company per currency region. So basically in Africa, that at least 6 companies, if you make the calculation. One in Nigeria, one in Francophone West Africa, one in Kenya, one in Cameroon, one in Congo, etc., etc. So you have to be able to serve your customers in any of these regions, and each of these regions has different currencies, so different, at least, terminology. So now, thanks to payment providers that are starting to offer more and more solutions, we might need less companies for that. So for anyone that wants to consider that, in some cases, you can rely completely on someone else, but in reality, the more you rely on someone else, the less you have control on the quality of your experience. If they have an interruption, you're dead in the water, and your customers won't take as an excuse, oh, it's not me, it's my provider. So that's another thing to keep in mind. It's interesting because, to be honest, I never thought about it, but I think the big difference is, I think we all mentioned it, but we didn't specifically state it out loud. When you diversify, you need to have a more intense focus on your customer. Because the problem is, if you look at one product only, like you mentioned, if I had a head of shipping, everybody is going to optimize for their own metric. And the problem is, generally, the metrics of one product is rarely going to help the others grow. So what you tend to do is to have metrics on the customer. So for us, it can be the average revenue per user, the NPS per country, the NPS per segment. But you need to make sure that it stays on the customer. And basically, in terms of our team, what it means is basically, you need a team. When we were at Afrikrea, honestly, I needed teams that were both able to be data focused, because on the marketplace and like e-commerce, it's data focused, and creative enough to be able to understand our customers' problem. And that was the 2 needs, data focused and creative enough. Now, with a shipping and payment solution, you also need people that are flexible, because basically, each customer type you have, each segment is very different. And the more diversified you are, the more different your customer needs are going to be. Even if ultimately they are the same in terms of, I might say, ideal consumption, normally they should all use all products. They are at different stage of their business. So they have different need for each of the product. So your team needs to be able to discuss with someone that just started the business and is focused on acquisition, and at the same time talk to someone that is doing over 1 million in revenue and focusing only on optimizing the fees that you're giving and the speed of service. So what generally happens to make that easy, if you look at a lot of SaaS solutions, they tend to have teams split by segmentation of customers. So either you segment by size, you segment by usage, but you rarely segment by product. If you do it, I don't know for the others, but in my experience, if you do it, they're going to optimize for one product and basically ignore the rest. And what happens is your customer feels like they are only paying for one thing, but they have access to a lot of things that they don't need. So it ends up being something that you despise. Because basically you are trying to push them to use something that your team is not pushing, because they are focusing each on one thing. And even on experience, when you build a product, another thing to keep in mind, when you build a product, you can hardly build an experience for only one part of the product. From the onboarding to the upsell, and especially in the upsell. You cannot say, I have someone that ships with me, I want him to pay with me, but I don't think about what does that mean for his experience, why would he change his habits? Because everything that we do as a startup ultimately is to change people's habits, hopefully for the best for them. You ask them to behave differently so that it's better for them. So if you don't provide that as your core, I might say talent management, and say to people, you need to be flexible and customer focused. And that means ultimately also that they need for the flexibility to go also into details. They need to master the products that you propose and the nuance between each. That's the thing. When you have only one product, I think it's easier because you just, even if they know approximatively, the customer won't feel like they are not useful. They will just wait for the answer. When you have a suite of products, it's more important to be precise in what each product can do and what are the advantages of cross-usage. So I think that would be my experience.
No, that's fantastic, and it's really good insight into how you actually structure and implement. And Farah, I want to just come to you. right? And I'll use something that Olusola mentioned as well. But I guess the question is, and I'm coming to you because I think from my perception, there's more of a shift in in transition with Okra than at Vesti, excuse me, and Anka, right? So I'm coming to you to just ask, how do you implement this kind of diversification without stretching your team too thin, right? You obviously, I imagine you still have people that are, every day is on, kind of the API open banking, and then you have people who are also, maybe the same people who are also, exploring the cloud opportunity. So how do you do that new diversification without stretching the team too thin? And then the part from Olusola, he mentioned kind of around the launch of the pilot for the Teslas, that there was some noise in the marketplace, right? And I'm just bringing that up to say, if I'm not mistaken, there was a bit of noise from the media before you launch a cloud product, right? So I think you officially launched in October, but by June, July, there was starting to be some, murmurs. Some people internally had leaked it to the press. So just, how do you implement this and stay focused when there's noise in the marketplace around what you're doing?
Yeah, I think that I would love to say that there's a certain aspect that you can't avoid in terms of stretching your your team kind of thin. Like that's the reality, especially when you're doing something that's completely like that is fundamentally different than what you were doing before. For us, there's aspects to that foundation that are the same. It's still infrastructure. We're still connecting various institutions and making sure that our customers have access to those things. But we're not building, like, for instance, a forefront consumer facing API. It's a different experience across the board. But it's getting into that startup mentality, that startup mode. I think that that knowing that we're trying to solve this and being realistic in what you can do, especially for what you're doing in your existing product. I think the first thing that anything comes with diversification, pivoting, any of these things. Firstly, one of the things I always say, like, pivot intrinsically is not a bad word. I think in Africa we kind of seen it as a bad word, but it essentially means that you either found an opportunity and that came from, like you mentioned earlier, either came from a need, a necessity, or an opportunity, right? Or a little bit of both. And so just being realistic on, like, what you can and can't do in terms of, like, there was some products that we sunsetted, but we wanted to sunset these products anyway because these were not our most widely used products as well, and so therein lies a focus area for ourselves where we said, okay, what we're focusing on open banking is, this onboarding identity, this, these are the aspects that we're focusing on, and then being also very realistic on what you can do in what you're trying to build, because first and foremost, we needed to prove this concept. The last thing you want to do is build another company that you feel as though you want to, devise, because this didn't come out of what can we do to do this thing? It's not pulling this out of thin air. This is actually a problem we're trying to solve internally. So this didn't start as a, how can we build this for other people and, like, how to do that. It was really just like, okay, we have a team that is focused on trying to move our infrastructure onto our own co-located data center, and how does that work? And so we essentially had very, very clear, like, I think clarity is really important. So very, very clear, like, a very, very clear roadmap on, like, what does that mean? What does, MVP look like? At what point would we start selling this? And what does that look like in terms of continuing to build? And then as we do that, you have to keep that realism as you see that this is actually viable. This is working. People are using this. We want to grow this. How do we then start? Either you start winding down, or you start building your business and your team around what you're building as well. But I think that's something that's really helped us is really keeping lean, and realizing you can do a lot more sometimes with a lot less people, because I think there's a big idea that the more people you have, the more products you ship, and a lot of times it's easy, but yeah, everybody's shaking their head no. It's actually a lot of times the more people you hire, the less product you shift, and a lot of times when you're growing, and there was a part earlier you asked about advice and so on and so forth. One of the biggest thing I talk about is team size and team building generally. I think there's no founder that would say if they started all over again, they wouldn't look at team building differently, even if it's to do more of something that they're doing amazing at, do a less of something they're not doing so great at. And one of the things that in the team building aspect is just making sure that, you do have people that are first principles that can get down and dirty and be in startup mode, but also realizing that like the more you grow, even as a founder, that's the more you have to grow, even in your managerial aspects. The CEO of a 10-person company is not the same as a 50-person company, is not the same as a 100-person company. You have to upscale your skills, how you manage people, how you grow as well. And if you're not growing fast as well, your manager's not growing fast, and people, you're just adding more people on top of that, that intrinsic problem. That's something that, I've learned as a founder. That's one of the biggest things I've learned as a founder as well, is in terms of building teams with more focus essentially. And so I think that's something that was really helpful with our shift. We had people that were domain experts in what the thing that we're doing, but we also had a lot of first principle like art, like the big shout out to the team just generally in their ability to just really just dig deep and start to build that product. So really, it was just the focus. Like we had extreme focus around wanting to solve the specific thing for ourselves, and then very much like grounded in reality and realism on what that means and what we can do. We at no point are going to sell you something we don't have. If you're looking for, something that is further out on our roadmap, it's just something that we can't do today. So we weren't trying to solve every problem for everybody. We were trying to solve the lowest hanging fruit, the most critical problem for you now, and then start to add on additional blocks, like Olusola was saying, in terms of how do you then own more of those items around the pipeline of them as well. And so eventually, of course, we will be, a large enough cloud provider to host even the most critical of your workloads. But we just want to start by, making sure that we can solve a specific problem for you now.
No, that's fantastic, and I'll come back just because I'm curious. What did the because you said something that's a great segue to the next question, but I do want to come back and just ask in terms of the ability to stay focused within noise from the media. Just did that article impact your decision? How do you stay focused on what you're doing when this environment of questioning, frankly?
Sure. So we knew, as soon as like, especially if you sunset your products and you're sending, customers, but we knew eventually someone would come knocking and ask questions, and so on. But for us, it was still just about that focus. It's not about, at the end of the day, it's never about that. It's about what you're building internally and so on and so forth. And so, at the end of the day, it ended up being something that, we had very positive feedback from in terms of, people, the interest, it did pique people's interest. And so we just had to take that as an opportunity to turn that into something that was beneficial for ourselves, and move forward as well. I think that it's always, as a founder, you always want to be able to control the narrative, especially around sensitive topics like this, because, the media a lot of times comes from an aspect of, having one piece of information and not really a lot of times the full block. And as much as you can provide that context if you're ready for that. But I do think that it's also okay not to be ready for that. It's okay. It's also okay to be heads down and try to focus on that. And so for us, it was really just about focus and knowing that, when the opportunity arose, like, here on this podcast today, it's you're able to kind of talk about it, but you should be able to, especially something like that, you should focus and control that. So for us, it wasn't something that, of course, that we set out for, but it's something that we were able to just essentially use to our advantage at the end of the day.
No, that's fantastic, and I like the advice you gave in terms of staying lean and what that means to your velocity in terms of products. And that's kind of the next segment I want to go to, is just advice in general. So Shola, I want to come to you and I guess ask the question at the top, right, at the top on the flyers, etc., for the event, right? Would you say that traditional startup wisdom of focus applies differently in African markets? So that's a general question. And then in terms of the advice for you, if you could go back, would you diversify earlier, later, or in a different way?
I thought it was.
I think I'm losing my connection.
But I think you can speak. The others will still hear you, I think.
I don't know if you heard me. I
Yes,
think I lost
had
my
the first
connection.
part of that question. Traditional, conventional wisdom of focus. Does it continue to play in the African setting? Did you ask any other additional questions?
Yeah, the second question was just around advice, right? If you could go back, would you diversify earlier, later, or in a different way? Just how would you think about your sequences relative to your product launches?
Yeah, so the first thing is, and I was really hoping for this question because I used to do entrepreneurship in the book, earlier, and resilience, is definitely something that If you were in the West or in a market that is a lot more mature, they just say resilience. Just stay doing it. Just keep doing it until it happens, right? Get to your tipping point, keep pushing until something happens. That's already a remarkable quality of an entrepreneur. But in our market, adaptability takes like the forefront. So you have to be adaptable. And number two, like every other company or every other founder, you have to be resilience. So being adaptable to be able to understand like the calculus, like you said, of, how do I return, investment? How do I make sure that my customers get value, for knowing us? How do I continue to tell a great story? I think it's really, really important, and our journeys as entrepreneurs is actually a story. For anyone who maybe abandoned or jettisoned a fantastic career in multinational or something else they could be doing, I just want to make sure that I'm not just running a travel agency. And where there's nothing wrong with travel agency, and where there's nothing wrong with just running a travel agency, I've been actually poked by some of my peers to say, hey, is this what you decided to go to do? And things like that. When I try to show them something bigger, I have to do the workings for them to be able to see. So adaptability is very important. Resilience is very important. Would I have done this a lot earlier? I think the journey really defines like the company ultimately. I don't know that we would have diversified earlier than we did. I think it's just really, like I said, a natural evolution on the journey that we're going to, and there's still left to be seen. There's still so much more to be seen. I've seen a couple of investors look at us and say, you guys look like a total wealth management company to me in the future, because I can see that now there's 1 million immigrants who have moved through you. Now they're thinking about investing back home. What's that going to look like? So I'm personally enjoying like the evolution and what happens, as we continue to go. I don't think I would have diversified earlier. I think that we did it right at the time we're supposed to. We're only 4 years old, so we're continuing to like evolve in the direction of what we're going to do. But if there's anything I'll leave today as advice, it is be adaptable. Like be very, very rigid on the mission, but be flexible on the specifics, like we always say, or the guys from YC always say. So the mission is the mission, but whatever takes us to that mission is what we're going to continue to do shamelessly, because we're the ones writing this story, like doing what needs to be done. You're the ones in the arena. Your face is mad with dust and sweat. It's not a critic. Who's like, okay, why are you doing this now? And if I do it and it doesn't work, I will gladly sip my coffee again, pick it up again. Like, of course, there are moments, don't let us simplify it. There are moments where you feel like, oh no, I should have called that earlier. But if it happens that one of it doesn't work, like I've sunsetted a few features. I do that really quietly, and I try to keep a tight ship. Hope that nothing, gets out in a way that I don't want. But I've had to sunset a few features that would just be like, you know what, we don't think we're doing this anymore. And most people may not even know that that's what is happening. Or would say, oh, we'll check back on this in the future when we think the climates are better. So, but yeah, we'll do it shamelessly, and we'll continue to drive until, the bottom lines that we're looking for: revenue, impact, people, a great story, and ultimately a future that is worth all of this hustle.
No, that's fantastic. If we weren't running out of time, I would come back to you, huh? That's exactly what I want to explore. What are the secret sunsetted products, and how do you decide? But that's for another day. Moulaye, it's now time, right? I think I referenced a question you asked before. If I'm going by memory, it was something around what you would do differently, right? So now 2025, if you go back to 2015, 2016, 9, 10 years ago when you were starting, what would you do differently? Or another way to ask the question is, what would you tell yourself? Knowing everything you know now, if you could go back in time to you starting out on the journey, what advice would you give yourself?
So it's the advice I give to all founders. What Shola said in terms of adaptability and resilience is, I think, paramount. I will add one thing to it, because I feel like we were very adaptable and resilient doing that 10 years. The one thing I think, if I were to look back and be honest on Anka and say, what did we lack that I wish we had done differently, is you should go faster. And it's going to be, people believe that when we say that, it's something true for all startups. But I want to specify something is, I feel like in Africa, we have a lot of headwinds that slow us down and make us spend a lot of energy on just maintaining things that are actually, I don't know the word in English for the opposite of headwinds, tailwind. I think that's the idea. You have tailwind when you are in some places in the US and Europe, because I see some founders, they do businesses in US and Europe that actually grow even quicker than they can imagine. In Africa, it happens, but very quickly, every time you grow, you have strong headwinds appearing from places you didn't see coming. So you are like, oh, okay, I'm growing there. And the only way is to actually be faster than people that are in the West. And to be very specific, if I want to be very pragmatic with people that are, even if you're not a founder, even if you're a product guy, go faster to the pain. That's my tip for everyone is, everybody knows what is the most painful thing in their business, in their job. What is the thing that they know they have the hardest time doing it? The longer you tend to do it, the less likely you are to grow to be big enough. So basically, I know I will sound like a speed-obsessed guy, but in my experience, to give you an idea, I feel like if I had, it's been years that I've been knowing the impact of social media on commerce, but the time it took us to structure the team, to convince the team, to convince investors of the importance of WhatsApp or Instagram, is time that I feel like we never get back. And I probably missed some tailwind there. Because you keep being in something, so you miss the opportunity of going to where the people are going to come next. You know, this thing is like surfing. There are waves coming. If you see the wave, it's generally too late. You need to be where the wave is going to come and just take it as it comes. So my advice, especially for African founders, is you don't have the luxury of time. I feel like sometimes when I talk to especially founders, they are like me. They are like, oh, but either I know my competition well, or I know I have no competition like me. Like everybody that tried to do what we did died. So I maybe got a bit complacent. I was maybe like, oh, everybody that is trying is dying, so I have time. When in reality, like it gets harder and harder the more time comes. So you better push. And it's hard things. And sometimes it's knowing that you are not the right person anymore to do this. Sometimes it's knowing that your co-founder is no longer the right person to do this. But the faster you go to these hard decisions, the more likely you are to succeed. That would be my very personal experience. I feel like I should have gone faster on a lot of things.
No, that's fantastic, and it
you.
dovetails well. Farah, I want to come to you with a similar, advice question, but just structured in a different way, right? So two-part question. The first part is really around, what surprised you, right? And you could take that to mean what surprised you while building Okra, this kind of 5-year plus journey. What surprised you about diversification in particular? So just what surprised you? And then the second question is around what big lessons have you learned, again, that you wish you knew beforehand?
Oh, wow, what surprised me? I think I'll come back to that while I think about that. But in terms of what big lessons, I think, so I talked about team building as well, just making sure you have the right team. There's so many lessons, so I feel like my brain is kind of circling. But I think that another one would be to so go deep then go wide sometimes, right? And there's aspects of going wide and going deep that are important. So one thing I think that we did well in terms of going wide to go deep is that we focused on a lot of enterprise large customers, right? Because the I guess the business life cycle to get them onboarded is longer, but the reward is a lot bigger, right? But then going deep and going wide on the product side is where you find those products that are working really well for your customers, and then you build on those, and then you build other products that come from that. As opposed to a lot of times we go into this understanding what we want to build, and so we're so laser focused sometimes that we're building in a silo where we're just building these features out because we set out to build them, as opposed to because these features are working, because they're generating revenue, and because these are the features that the customers want. And I think that another really big lesson, I think that along the line that's really important is to really sometimes trust your gut a lot. As time progresses, you feel like decision making is actually really easy early on, right? They're smaller decisions, and even if things break, the impact of those decisions are not as large, right? But as you grow, And I think that's probably where Moulaye came from when he's talking about moving fast, sometimes and moving through, other people moving at, like, as we're seeing other people, like, these businesses are not working as well and you are continuing to work. I think that what's really important to know is that, you can move, you can trust your gut with things like around, like, sunsetting things faster, building things that, experimenting with things and so on and so forth. That's where diversification comes from generally, and then when you start to kind of think outside this box, I think that that's where you kind of understand where your business is naturally growing. I think that you can't be, a lesson I learned from, one a professor I had in university was that, when it comes to programming, because I was a computer science major, so I was doing a lot of coding, was like, you never should be too afraid to kill your baby. And what they meant by that is that sometimes you're doing something, and because you love it so much, it's the best thing since sliced bread, right? And because you're selling it, I'm a great salesperson. There's probably not much that I can't sell to you, but it doesn't really necessarily mean that I should be building and I should be selling it in the first place. And so for me, that's been, a really big one. And then also seeking, I wish as a founder, I also spoke to more founders. I think that's the number one thing that I would say. A lot of times in the beginning, it's like, I don't know, especially if you're building with like competitors, it's like, I don't want people to know what I'm building. Like there's so many things that happen, like, I don't want it's just all this stuff. Or you are talking to founders, but you're not, a lot of times it's hard, you're not talking about the hard stuff, the things that are like the founder isolation, the things that are happening as well. Not only talk to more founders, but not be afraid to share your low lights, not just your highlights as well. And I think that you find out that you're not everything, you're not alone. One, a lot of these things are normal. A lot of times, I'll say something to a founder and they'll just laugh for 5 minutes before giving any piece of advice, because it's like, been there, been through that. And then in terms of what surprised me, I think is, just the amount of resilience, like, I've had and my team has had as well, and the amount of perseverance that's happened as well. I think that's more of a positive light. I feel like that's, what surprised me is just our ability to roll with those punches and our ability to see, that great horizon and actually continue to chase it with that same vigor, if not more vigor as well. And so that's been really surprising. And also just, the amount of time you put into it. Like, time is not your luxury, but time moves fast. And 5 years has come by very, very fast. So that as well.
No, that's fantastic, and I'm glad you said that, right, in terms of wishing you had the, intention and the action to talk to more founders, right? So that's one of the, I think there's a lot of value in bringing founders together to have conversations like this, for you all as well, but also for, the folks in the audience, frankly, right? To understand how you think, how do you actually think about the strategic aspects of some of the choices you make, and then how do you actually implement, right? So in terms of me, what I really appreciated and stood out for the conversation was Moulaye, a highlight of the T2, D3, right? In terms of, that's something we should think about and talk about more. And then in terms of executing, I think, Fara, you said this in terms of what Shola mentioned, but I think you said in a very crisp way in terms of how do you execute this kind of diversification. It's really around paying attention to the pain points, right? So one pain point from Shola was, hey, I'm referring people for this service. I think it was around mortgages. I'm constantly referring people for mortgages, right? And then for you, you had mentioned, okay, there's this pain point I keep hearing people talk about that I don't offer today. So maybe I should start, going into that area. So that's one key way for founders to think about, okay, what are the opportunities to diversify, right? Where are the actual pain points today? And then in terms of the advice, I think just everything, I think you guys hit it all on the head. Just the idea of, resilience is key overall. I think in African markets, being adaptable is number one, because I think many of you have said it in different ways, but shocks come in different ways. I think I remember, Moulaye, you mentioned this, right? So I forget the exact words, but shocks come around in many different ways, right? So you have to be adaptable. And then Farah, that last point, your first point actually, around team building, right? The importance of, thinking about how to build your team and staying lean to influence the product velocity. And obviously, Shola, Moulaye, you mentioned kind of the importance of structuring your team in the right way for the product you're trying to build, whether that's, SaaS and structuring around, the solution, so you're not building in silos, or whether it's around countries, right? So you could really, exploit country opportunities faster. So just that big team opportunity is key. And I liked, I think it was Fara, I forget now, it's all jumbled, but one core takeaway is, maybe Moulaye, I forgot, I'd go faster to the pain, right?
that's
So
good.
just the idea of, especially linked to, if the pain point is how you discover, diversification opportunities, let's all move faster to that pain. So thank you all. I really appreciate the conversation. I mean, I'm seeing, some of the feedback on the, from the chat. So I think a lot of people really took a lot of value from this. So really, just want to thank you all for being here. Thank you all in the audience for staying with us. It's, an hour and a half, so it's quite long. And, if you're in the audience, follow AfriDigest on LinkedIn. Subscribe to us at afridigest.com/subscribe. Thank you again.